If you were born on or before December 31st, 1961, I need you to stop what you are doing and listen. There is a brand new tax deduction worth $6,000 for you, $12,000 for you and your spouse together, and most retirees in this country have not heard one word about it. Not on the evening news, not from their tax preparer, not from the IRS itself. It was written into the big tax law signed in the summer of 2025. It runs through tax year 2028, and then it disappears. 4 years. That is your entire window. And here's the thing, most people don't know they already qualify. This one is for you if you get a Social Security check. It is for you if you have not worked a paying job in 15 years. It is for you if you and your husband both retired last spring, or if you are widowed and living on one income, or if you are still filing your own return every April, because that is just what you have always done. It does not matter if you take the standard deduction, and it does not matter if you itemize. It does not matter if you own your home or you rent it. It stacks on top of everything you already claim. $6,000 gone from your taxable income before Uncle Sam calculates a single dime of federal tax. And I promise you, nobody is going to call and tell you about it. Let me tell you a quick story. My mama turned 70 last spring, up in Michigan, where I grew up as one of 5 kids on a teacher's salary. She called me in a panic in February because her neighbor at church had mentioned something about a new senior tax break, and my mama was convinced she had already missed it. Now, my mama has been doing her own taxes since 1972. She keeps a shoebox of receipts on top of the refrigerator. She reads the instructions twice, and even she had never heard of this thing. That is how quietly Washington has kept it. So if you feel like the last one to know, friend, you are not alone. Half your neighbors are right there with you. Quick honest note before we dig in. I am not your CPA, and this is not personal tax advice. Every situation is a little different, so before you file, run this by your tax person or head straight to irs.gov and confirm the numbers for your own return. The rules are real. They are on the books right now in 2026, but the details on your kitchen table are yours. Here is exactly what this thing is. Buried inside the big tax law from 2025, in a section the accountants are calling the senior bonus deduction, there is a brand new deduction just for seniors, 65 and older. If you have turned 65 by the end of the tax year, you get $6,000 off your taxable income. If you are married filing jointly and both of you are 65, that is $12,000 off. This is not a tax credit. It is not a check in the mail. It is a deduction, which means it lowers the income the IRS gets to tax you on in the first place. And here is the part that surprises most folks. It sits on top of your standard deduction. It sits on top of the extra standard deduction that seniors already got. It stacks. 3 layers of protection all at the same time. Let me put real numbers on that so it lands. In 2025, a single filer 65 and older gets a standard deduction of $15,750. On top of that, the older senior extra standard deduction adds another $2,000. And now the new bonus deduction adds another $6,000 on top of that. Add it all up, $23,750 of your income, gone from the tax calculation before we even get started. For a married couple both over 65, taking the standard deduction, the total is $46,700. $46,000. That means a retired couple could pull in nearly $50,000 in the year, from Social Security, from a pension, from IRA withdrawals, and legally owe 0 in federal income tax. Most people don't know that either. Now stay right here with me for 2 more minutes because I am about to walk you through the income cap where this deduction starts to shrink and the one line on your 1040 where honest folks accidentally cancel this whole thing out. If straight talk about retirement money is what you needed 20 years ago and nobody ever gave it to you, tap that subscribe button. I put out a new one every single week and I promise you I will not waste your time. Here is where you need to pay close attention. This deduction does have an income cap, and the IRS calls that cap your Modified Adjusted Gross Income, or MAGI for short. For almost all retirees, that number is just your regular AGI, the one at the bottom of page 1 of your 1040. If you are single and your MAGI is under $75,000, you get the full $6,000. If you are married filing jointly and your MAGI is under 150,000, you both get the full 12,000. Above those numbers, the deduction starts to shrink, 6% for every dollar you go over the threshold, per eligible person. And it phases out completely at 175,000 single or 250,000 married. So if your income sits comfortably in retirement territory, you almost certainly qualify for every last dollar of it. If your income is higher, do the math carefully before you make any big moves this year. Folks always ask me the same question next. What is this actually worth to me in real dollars? And the honest answer depends on your tax bracket. A retiree in the 12% bracket, that is most single seniors with modest incomes, saves about $720 on the $6,000 deduction. A retiree in the 22% bracket saves $1,320. A couple both 65 and in the 22% bracket claiming the full 12,000 saves $2,640 off their federal tax bill. That is not a refund, that is not a windfall, but that is real money back in your kitchen envelope every year for 4 years if you know to claim it. Here is the part that should make you a little angry. You may have heard someone on television say this new law eliminates federal tax on Social Security. I want to be straight with you, friend. That is not what the law actually says. The rules about how Social Security gets taxed did not change one bit. What actually happened is that this $6,000 bonus deduction, stacked with everything else, wipes out the federal tax bill for a whole lot of seniors whose Social Security was already being taxed. So the tax bill lands at zero for many folks. And that part is real. But the underlying formula did not change. If somebody told you the government just made Social Security tax-free, they were selling you a headline, not the truth. Here is exactly how you claim it when you file your 2025 return this filing season. There is a brand new form the IRS created just for this law. It is called Schedule 1A, Additional Deductions. You fill out Part 5, that is where the senior bonus deduction lives, and the total flows over to Form 1040, Line 13B. If you use TurboTax, H&R Block, Tax Act, or TaxSlayer, the walkthrough will ask you your date of birth and then handle the form for you behind the scenes. If you go to a tax preparer, make sure they specifically ask you about the new senior bonus deduction because people have already filed and walked right past it. And if you file the old-fashioned way on paper, you can print Schedule 1A off the IRS website for free. It costs you pennies and it could be worth thousands. Now, here is the trap I promised you at the start. A lot of folks near retirement are doing Roth conversions right now, moving money from a traditional IRA into a Roth so it grows tax-free. That is a smart move for many families. But listen, a big conversion pumps up your AGI for that year, and if it pushes you over that 75,000 single or 150,000 married line, you can accidentally phase yourself right out of this deduction. So can a big one-time IRA withdrawal for a new roof or a car. So can a large capital gain from selling stock. Before you make any big financial move this year, sit down with your numbers and see whether it costs you the $6,000 deduction. That is not a mistake you can undo in April. One more honest thing before we wrap. This deduction does not lower your Medicare Part B premium. That IRMAA surcharge, the one that hits higher income Medicare enrollees, uses a different income calculation that this deduction simply does not touch. So if you were hoping this would trim your Medicare bill, it will not. And this deduction does not flow through to your state tax return in most states. Most states start their math from your federal AGI, which this deduction does not change. So check your state's rules before you count that money twice. If you are 70 and a half or older and you give to your church or a charity, look into what is called a Qualified Charitable Distribution, or QCD for short. You can send money straight from your IRA to the charity, and that money never shows up in your AGI. That protects your phase-out threshold. Same idea. If you can afford to delay Social Security a year or two, your AGI stays lower, and this deduction stays fuller. And if you are still working part-time past 65, a traditional IRA contribution or a health savings account contribution will trim your AGI too. Small moves. Big protection. Let me put this all in one place before we go. $6,000 per senior. $12,000 for a couple where both are over 65. On top of your standard or itemized deduction. On top of the extra senior deduction you already got. Phase out starts at 75,000 single, 150,000 married. Claim it on Schedule 1A, Part 5, filed with your regular 1040. It runs for tax years 2025, 2026, 2027, and 2028. Then, unless Congress renews it, it is gone. Now, before you go, do me one favor. Drop your state in the comments below, because some states honor this deduction and some do not. And I want to see who is watching from where. And type the word Amen if you think Washington should have made this a whole lot louder for the folks it was written for. Then pick one person, your sister, the neighbor across the street, the friend from church who has been grumbling about her tax bill, and send them this video. That could put real money back in their pocket this year, and it costs you nothing but 30 seconds. My mama got the message from her neighbor. Somebody has to be the one who passes it on. This time, let it be you. I will catch you in the next one. Take care of yourself, friend.